Hello, John here. Got a good update for you. Be sure and sit back for a few minutes and view this. I think you'll be better served for it. And today I was thinking about where we are as the marketplace and how people are feeling and watching television. If you do that, make the mistake. There are some people that are pretty fearful out there, and fear has always been something I have not wanted to invest any amount of time in. And I found this quote recently from a circus company years ago. They used to say this about fear. I thought I'd share it right now. Says our full potential is on the other side of fear. Quite frankly, a lot of fear comes from just not knowing. So I want to give some perspective as to where we are, not what I think is going to happen in the market, because nobody really knows. But the really thing I want to control is what I can control. I'm going to show you what we're doing with that and how we're doing so. I'm going to take one path to do that to show you some of the stocks we own. And I want you to think about these companies and ask yourself, will a bad quarter, will a bad month, will one bad year take this company off its path? Let's go ahead and bring this up. I think you'll find this very, very insightful. Let's take a look at Google, one of the bigger companies we own. This is their balance sheet we'll take a look at. It's going to show us their assets and liabilities and how those funds are situated. Let's go to 2024 here. Scrolling on down, and we'll see that their gross profit was $203 billion. Their margin was $58 billion. Their net income was $100 billion. Now, what's interesting to take a look at this is the previous years, their net income grew consistently from $30 billion to 34 to 40 billion, $76 billion. Now it's $100 billion. And you take a look at their net margin is 28%. Let's take a look at their balance sheet statement. And what you see here that is really significant is their retained earnings, which is the money they kept after paying their bills and paying their dividends, was $245 billion. And the previous years, it ascended at a kind of steady pace year after year. The total shareholder equity is $325 billion. So the question to ask yourself is, a company like this, how bad is a bad quarter, bad year going to affect them? Is it going to put them out of business? Or what is it going to do to them? Take a look at the income statement over here, and you'll see some other information that will help you answer the question. Here you see the gross profit was $203 billion, 58% margin. You see here, as you go through this, that their EBITDA was $129 billion. And it grew year by year real steadily. So take a look at a few other companies that we got through here. Y'all know, we probably know that we own NVIDIA. They're a global powerhouse. They're a leader and player in graphic processing units. And take a look at their balance sheet again. Let's just skip down to the bottom of it here. You see their total liabilities are $32 billion, and their shareholder equity is $79 billion. They have a $68 billion in retained earnings. Just a huge, huge player in the marketplace. And really, what's going to stop them? The trade war may be something that's going to be there for some period of time, but I don't really think it's a whole lot of stopping them. I'm going to show you one more to give you perspective of the strength of these companies. Let's take a look at Tesla and take a look at it here. You see that the revenue the last 12 months was $97 billion. The gross profit was $17 billion. Margin was 17.86. And they have a real good EBITDA there as well. Now let's go take a look at the balance sheet. Balance sheet compiles their assets and liabilities. You see here that their assets are $122 billion. Their total liabilities are $48 billion. Their retained earnings, that's the money they kept after conducting business last year, was $35 billion. And their total shareholder equity was $72 billion. So this is a company that's got a real strong balance sheet. Tesla has quite a few irons in the fire. They have the self-driving car coming about. They have the robots, as well as other things. I really think that given their balance sheet and where they are, I don't see them going away. I think what you may find happening over time is, if we have a bad market, bad recession, some of your companies that don't have the same balance sheets as the ones I mentioned are going to end up being bought out by the stronger companies. Every time is different. You can't say that any one time is the same as the previous time, because Every time seems to be different. This is quite a bit different with the worldwide tariff issue that will someday be resolved, and probably sooner than later. I would imagine sooner than later, because every single country on the planet wants to resolve this trade conflict, and they will do their bit to do that. In the meanwhile, what do? Well, we follow our plan. As you should know, a good many of your assets are in assets that have no risk or very little volatility. So that'll give you a good bit of protection there. There's also a great benefit in owning just a wonderful, wonderful company, and we own 40 wonderful companies. But having said that, they're still subject to short-term fluctuations. So a bad comment today can cause stock to go down. That doesn't mean a whole lot in a 1 day's time frame. And over time, these great companies do really, really great. We're paid to be patient. That's really where it is. So I don't want to be patient. You don't want to be patient, but that's the key to being successful in investing, is being patient and having a plan like we have. I'm very confident we're going, but it will take some time today to kind of illustrate exactly why we're buying these companies. So maybe make better sense to you as to why I really don't have a great deal of worry or concern. Let me know if you have any questions. Talk to you soon.